I wish you a wonderful morning here on 26th of March 2026 at the Digital Euro Conference. And we have a long day today on innovation on this stage. And we have not only visitors in the auditorium, but we have a large crowd following our discussions online. And first speaker, I would welcome Jan Siebert. He is from KPMG, partner there. He worked on pilot projects, DLT. He also was successfully implementing his own ventures, and he will speak about transformation of the financial system, the fascination of the transformational systems. And we're very excited to have him here. Thank you very much, and we're very eager to hear from you. You use this, yes, for the slides, and you get your own mic, and we can start. Yes.
My own microphone.
The floor is yours.
Perfect. Oh, wow. Applause for the start. Great. Yeah. Good morning, everyone. It's wonderful opening the innovation stage here at Digital Euro Conference this year. And I would, first things first, maybe for the audience here in the room, we really have a workshop atmosphere here, I would almost say. So whenever there should be comments or questions on the topic today, please reach out and let's get into a fruitful discussion. So what I would like to discuss today with you guys is really the fundamental transformation of payments that we see on the horizon with new payment rails, rich data, and programmability of payment infrastructures. And I want to make it a bit more tangible, and we want to take the perspective of banks, actually, and financial service providers and PSPs, and how they adapt, actually, to those developments in the payments infrastructure field. So, what is the picture that we actually see on the horizon? We see a new digital money ecosystem evolving with new digital forms of money. Let it be in the upper left, regulated stablecoins, here in Europe under MiCA. Let it be wholesale settlements on DLT, what we see with Pontus and Appia in the long run. We see the retail digital euro as a important initiative of the euro system, and obviously also commercial bank money token. Yeah, and this new money ecosystem actually leads to a fundamental shift in the underlying infrastructures and payment rails. Yeah, and preparation for those shifts, we believe, is something of high importance for banks with an active and relevant payment business as of today. Let me check. Oh, yeah, we are right. So what we believe is actually more important than looking at the new form of money is actually looking one level below in the underlying settlement infrastructure. Yeah, and what we believe is the real game changer also from the operational and business model perspective of a bank or PSP is that those underlying market infrastructures are changing. Yeah, we see global 24/7 real-time settlement coming with those new digital forms of money. Some of them will be programmable and will be able to be smart contract compatible. We will see new digital forms of money that coexist with digital assets on the very same ledger and infrastructure. And we believe that's really where the magic happens and where the real change also from the perspective of a bank, FMI or PSP really is happening. At least in Germany, we have brought some numbers here. Banks and financial institutions have recognized this change in the machine room of payments. We do a global survey, actually, talking to banks globally and ask what is your current level of activity in the payments field, and actually 91% of participants in the German market responded that they have currently a payment modernization program in place or are close to starting that one. I think you have to keep in mind we asked the payment leads in the individual banks and organizations, and obviously they are all in favor of investing money into their infrastructure. So there might be a small bias in the numbers, but I think we already see that there's truly, the institutions, the banks are getting ready. And if we look at what are the drivers for payments organizations to really go into modernizing their tech stack and their infrastructure, we see on the right all the topics that we know anyway. So I do not want to go too much into detail there, but more put the focus on how to really get into doing, right? Because new infrastructure is coming, everybody's investing some money, putting some chips on some topics, but how you can really adapt as a bank or PSP, we believe is key, because we need to get into some sort of structured preparatory work. And we believe the first and foremost important step is you should really define your individual level of ambition as a bank or PSP with respect to the new digital forms of money. Yeah? And I want to deep dive on some examples of banks in the European Union and that actually have decided on their level of ambition with respect to some forms of digital money and also how they got into execution. And that's what I want to share in the next step. So let us start with stablecoins. Yeah, I mean, we have the MiCA regulation now in place, and as an institution, you can really say, "Hey, I'm more on a am I a fast mover to the very right? I really want to go deep into that market." We come to that in a second, or do I have a rather conservative approach? But I recognize that stablecoins might play an important role in the future payment landscape in Europe. How could I adapt? And what we have discussed with various clients and what can be a very good and first move into the stablecoin ecosystem from the perspective of a regulated bank and PSP can actually be to implement something like a passive payment acceptance solution. What do we mean by that? Within the stablecoin ecosystem or field of play, let's say, there are plenty of business models from a perspective of a bank that you can implement. We actually like the passive payment acceptance quite a lot because it means I'm not going into an issuer model. I'm also not doing active transfers in and out. I just, for example, for my SME or wholesale banking client segment, I allow wholesale clients to accept stablecoin payments, ideally in cross-border transactions, because euro-nominated stablecoins are not really scared that much and adoption is rather low. So, for example, for banks with an active also cross-border business on the SME and wholesale side, you could say all my corporate clients can just passively accept US dollar nominated stablecoin payments. They are directly transferred into cash deposits. You do an FX business and there's no direct interaction with the blockchain, with the stablecoin from a client perspective. That's a solution that is relatively easy to implement, directly triggers an positive client and business value, and can be a very, useful first step into the stablecoin ecosystem. Yeah? We have designed a target operating model framework also together with SAP and the Currency Hub to really also make that product solution quite easy. I wouldn't say it's turnaround or turnkey around, but at least, all the relevant process are predefined, all the questions with respect to compliance are and AML are predefined, and also banks that are currently using SAP on the tech stack side might have a a relatively easy adaptation path here into that solution. Let's move forward. You might also be a bit more ambitious in the field of stablecoins, and we indeed see some banks and institutions across Europe who have a higher level of ambition with respect to stablecoins, and then an issuer model actually could be the right approach to follow. What we see here in the market is actually some first movers, right? We have SocGen with Forge, who have built up an EMI and e-money token issuer model in France. We have DWS, Flow Traders, and Galaxy together forming all Unity, who recently got the EMI license granted here in Germany and are now in the phase of distribution and use case build-up. Actually, what I find a very exciting initiative also is Kivalis, a bank-led stablecoin consortium that is based in the Netherlands and is following a multi-issuer model. You know, instead of each bank building up their own issuer model, we go into a consortium setup and actually try to also realize synergies here. Kivalis is currently, the initiative has started, the license has not been granted, but the consortium is currently in the preparing, let's say, investment round 2, I would say. So gathering new banks and partners who are willing to join the consortium. And I think this is a valid approach for banks across Europe who have a rather ambitious or a high ambition in the field of stablecoins, investigating whether participation in such multi-issuer models like Kivalis could be a tangible approach. Let's move further. We're leaving the field of stablecoins, now moving a bit more into wholesale settlement and the initiatives around Pontus and Appia, but also I would take it a bit broader. You know, I would say the development of a future wholesale settlement infrastructure in Europe that might not just only cover the money side, but obviously also the asset side and the asset leg. And I think we have some really exciting developments here in that field. Walking from left to right, we see more and more standardization actually happening in the digital market infrastructure in Europe and beyond. And what do I mean by that? Things in the beginning were, I would say, a bit like a mess. You know, we had tokenization on various ledgers and infrastructures. We had different settlement solutions on the cash side. We had, you know, and I think that's totally normal if a new technology evolves and matures within an existing market and ecosystem. However, this mess sometimes made it a bit difficult to move from, I sometimes call it proof of concept happiness of islands of happiness, you know. Yes, I have proven I could tokenize something on some ledger and there's no positive network effects, no market, no liquidity at all, you know. That's a bit, was exciting 2 years ago, you know. I think now we are in a different phase. Banks really have to make smart decisions with respect to where is the ecosystem moving, where is a digital financial market infrastructure in Europe actually really evolving, what are the important initiatives, where should I put my chips to really participate in those developments. And we actually like the ASAP model of the IMF very much. It helps to structure a bit a future digital financial market ecosystem along the layers access, service, asset, and platform. And Let me maybe just pick out two examples. We talked about Kivalis, for example, as a settlement instrument on the cash side. That's something that can be well sorted into the asset layer, right? But we also need to look to the fundamental platform layer, actually the DLT networks and rails that we want to use. And there's an exciting initiative ongoing by a group of 10, now 11 banks across Europe that want to set up a market-neutral DLT network under the name Regulated Layer 1. It will be a Luxembourg-based cooperative entity and non-profit that actually just provides a market-neutral, dedicated DLT network on EVM base for the regulated financial industry. It has safe and sound governance, you know, and there might evolve real traction and liquidity on such a network, you know. There are, on the service layer, for example, players like Centurion from the Börse Stuttgart group or 21X that provide regulated settlement and trading services, you know. And all those different building blocks of a future digital market infrastructure need to kind of, you know, need to come together to actually really have a powerful ledger-based future market infrastructure. Happily, we have some support from the regulators. The pilot regime is in place. We see with the market integration package currently some extensions of the pilot regime in terms of volume and time limitation, but also new licenses will be added. And with MiCA, obviously, we have a full-blown regulatory framework for MiCA-regulated stablecoins. So I think a quite positive starting position. And we see that more and more banks actually search for on which of those layers of the ASAP model I want to play which role. Where do I go into a rather competitive approach, and where do I rather collaborate? You know, and I think this is exactly the right questions you should ask yourself as a bank or PSP now getting prepared for this digital capital market in the future. We have done quite exciting study on that topic together with KfW and 10 more banks from the German market, and the link is added to the presentation and provides a bit more details and context. Let's move to the last pillar, the retail digital euro. Yeah, we have all heard pilots are starting now. Maybe, and we also learned on the main stage and the panel that, and that's resonates very well with our market perspective. The larger institutions do some prep work. Yeah, smaller institutions stand on the sideline, some hoping that it never comes, you know, others just standing there, you know. But I would really say the bigger players in the market are those who get into some sort of preparatory work, also to possibly belong to the early integrators of a digital euro. And I have to admit, if you really want to do your homework with respect to the digital euro and really get your organization prepared, that's quite a bit of work, and it's pretty complex also. At the same time, the rulebook has more than 1,000 pages. At the moment, in the current version, we have plenty of end-to-end flows. It can be a bit overwhelming almost, and we have tried to come up with a structured approach to really derive the implications on your IT operations and current payment organization from a bank perspective when it comes to getting prepared for the digital euro. And what we have made some quite good experience is trying to structure a bit more from a user perspective. So on the right-hand side, in wave, you can prepare your digital euro readiness in waves, for example, saying, hey, as a first step, I'm really focusing on, as a user, I can pay at the point of sale, and that's really, you know, I'm deriving the core functions from those use cases and really focus on that, you know, and then I continuously extend from a feature and functionality point of view and walk through those different layers, because starting with page 1 of the rulebook to derive a integration or implementation plan definitely does not work for banks. You need to get into some sort of structure, and that's where we made at least some good experience in the past, that trying to get into such a framework can be helpful in an early pre-study or analysis from a bank point of view. What does the digital euro actually mean to my target operating model? Let me finish up with 4 key takeaways. I think first and foremost, for us, new digital forms of money are exciting. The focus from a bank and PSP perspective should really be on the underlying settlement infrastructures and the potentials that come with those settlement infrastructures. We are really moving from an account to ledger-based infrastructure. We will see programmability. Data will be attached right next to the transaction, and that will change fundamentally how payment operations and value chains will function in the future. Second, you should really define a level of ambition, and this can be sorted along the different forms of money, digital money, and that should also be aligned with top management, because some of the new forms of digital money can be very emotional, also from a personal perspective of the top management, as they are, let me just, I mean, the digital euro, for example, is something that can also be discussed very controversially on a board level, right? So really get an aligned, with top management, aligned level of ambition in the different forms of digital money, and then go into executable initiatives. You know, not just only stay with, we have a good level of ambition defined, but really break it down into executable initiatives. And those initiatives should be use case driven, focus on a clear customer problem, like the passive stablecoin acceptance solution that I just mentioned, you know. However, when it comes to also deriving infrastructure investments or renewals of the underlying tech stack, that should be definitively derived from a long-term enterprise architecture point of view, you know. In too many banks, I have recognized that, for example, a key management solution that is absolutely key to interact with ledger-based and tokenized financial instruments, crypto, and tokenized forms of money. It's a key building block in your future tech infrastructure. Often was solely driven from one product initiative, you know, and then you introduce a key component of your tech stack solely driven from one product initiative. Let us build up a crypto brokerage offering, for example. And you oversee the importance of that key building block for other products and services across your entire banking organization. And that's really, that's something you should avoid. You know, initiatives can be use case driven. Platform and infrastructure investment decisions really should take an enterprise point of view. And last but not least, and that's probably from my point of view the most important one, we should really shift a bit the perspective on how to adapt to those new forms of digital money, not just solely looking at our own institution, but taking an ecosystem standpoint. And what do I mean by that? The future market infrastructure in Europe, we talk a lot about resilience, sovereignty, will be competitive on some layers, but it also will be collaborative on many other layers. And we have seen the ASAP model really making clear decisions. Where do I want to compete? Where do I want to differentiate myself? And where do I follow a clear collaborative approach? Let it be, for example, on the fundamental platform layer, because I say I do not need my own DLT network. I rather collaborate with other leading market organizations on that pillar, is a really key point to take. You know, you will not solve all of that within your own organization. There will be parts where you need to get into collaboration. Thank you very much.
Thank you, Jan. Do we have any questions in this morning session for Jan? I have one question. You mentioned to integrate systems into existing organization. What are architectural problems you have to overcome? Because the banks have their stacks and then hundreds of different systems. Where are the difficulties on a practical level?
Yeah, that's a very good question. I have 2 minutes and 10 seconds on the timer here.
Yes.
Impossible to answer.
Of course.
But maybe the key points to mention. It's if you build up a digital asset or let's say DLT stack within a banking organization, making the 2, 3, 4 new software to introduce decisions like I need a key management component, I maybe need some trading and execution solution, and maybe some compliance on-chain analytics tools. Those are that's the fun part. Yeah, that is very enjoyable. You have RFPs, you compare different software as a service providers. The hard work starts with the integration into the existing core infrastructure. And I would like to mention 3 points that you shouldn't miss out. In the long run, we will segregate accounts and assets mostly on-chain. As of today, we mostly do this in the existing account systems of the banks, so either in the core banking or depot systems, or account or banking systems. This integration is absolutely key. You have omnibus structures typically on-chain, and you need to have some sort of deep integration with the existing account and depot system. You should focus on that one in the first step. You should never oversee the interfaces and integration into the finance and risk systems, because that's, the second line will hit at some moment. And I think those 2 are really, from my point of view, the most important to keep in mind.